Hi guys, I want to show you today what we're going to be doing in accounting. I wanted to review your assignment with you just to make sure that you were comfortable with what you would be doing. So today we're going to be doing the expanded accounting transactions, and I went over that in the video called Summarizing the Transactions. And you can go to Joining the Pieces and you will see several helping pages here just for your information: expanded accounting equation, summarizing transactions, and a guide for financial statement preparation. Those are there for your help. Also, I want to go up here and remind you that you have in your textbook Chapter 1, The Nature of Accounting, and that was under September 21st's module, but that is here, and that is there for you to use, and it will outline each transaction that you will be doing today. So if you get stuck, go back to your chapter and read it, because there's a lot of good information in it. So now let's look at what we're going to be doing today. I'm going to go back to today's assignment, today's module, and before you begin the expanded transaction assignment, I've given you a little page here, and this is just to remind you that you are going to be recording expanded transactions today on a spreadsheet, and each type of transaction shown in your assignment is illustrated in your textbook beginning on page 19. Please refer to Chapter 1, The Nature of Accounting, if you get stuck. Okay, that's always a good place to go. There's a lot of good information in your chapter. Okay, this is your assignment. When you open it up, it's going to be recording transactions. So you're going to use the information in this problem and record each of the transactions in an expanded accounting equation. And I've given you a form. So what you're going to do is you're going to use the link to open this document. Well, you're going to use this form, and you're going to make a copy of the document and complete the transactions, and I've put the transactions here. So you see these are very similar to the transactions that we talked about in the video before. And each one, it's about Cheryl Rogers opening a tutoring service on January 2nd. During January, the following transactions occurred. So there are 11 transactions here, everywhere from Cheryl investing $8,000 cash in the firm. She has purchased office supplies on credit, office equipment on credit. She's invested a personal computer into the firm. Paid rent. Now, anytime you have something that says paid, that will mean it comes from cash. So keep that in mind. Paid means cash. Okay? If it means on credit, then you've created a liability. You've created a debt, and you need to record that properly. So, in order to do this, you're going to start with this form, problem 1-1A, and it will open into a Google form. Now, the first thing you're going to do, just to make sure you can write on it, you're going to make a copy. And you can say, okay, you don't need to change the name on this one. It will say copy of problem 1-1A. So you can just say, okay. And now you have a form to use. And you notice this form, I know the screen doesn't show the entire form, but it is by transaction, and you see all of the accounts here. Here are your assets. You have cash, office supplies, and office equipment. Your liabilities for this problem are accounts payable. That's the only liability you will have. And remember, liabilities are a debt. And then you have your owner's equity, and this is in expanded form. Remember our last example there. We have owner's equity plus revenue minus expenses. Now, one thing different from the example that I showed you, you do not have to identify or describe each transaction. You only have to enter the amount. So, let's go back to our problem. And the first one is, the first transaction is Cheryl invested $8,000 cash in the firm. So, you would go back to your form, and she invested $8,000. So it's going to be plus, because you are increasing an asset. So you're plus, and then she invested it. So since she invested it, you are going to increase her owner's equity account. So it's increasing. All right. Now, for this one, I have given you a balance after every transaction. So then you will put the balance. And you see only 2 of your accounts have a balance at this time. So just leave the others blank. You don't need to put anything in them right now. So, okay. Now that is your first transaction I've done as an example for you. But you see that you did, here's your equal sign. And you increased your assets on this side of the equal sign. You increased them by $8,000. So on the other side of the equal sign, everywhere from liabilities through expenses, you have to increase it $8,000. Well, you did. You increased the owner's equity. So your account is in balance. You just need to make sure on every transaction that you keep each transaction in balance, and then you put an account balance after every transaction. And you can see here that the transaction number and then balance. So you can just go through each of your list of transactions and put them in the appropriate column. And you see, remember, here's the assets of cash, office supplies, office equipment. Your liability is accounts payable, and then you have owner's equity, which is Cheryl Roberts Capital, you have revenue, and you have expenses. So, and also remember, if you are increasing your expenses here, you're going to put a plus because you're increasing the expenses, but you're actually in the transaction, you're going to be subtracting it because you subtract expenses in the accounting equation. All right, so that is your assignment for the day. And then this is saved in your Google Drive, and then you will submit it. You will upload a file for this. See, you're submitting a file upload. So when you click submit, you will just copy the link to your Google Drive, to your Google form over, and submit it that way. As always, if you have questions, please let me know.